Hey, welcome back to the What the Wealthy Do podcast, where we pull back the curtain on the strategies the wealthy use to build wealth and show you how to make those same moves on your own wealth building journey. I am your host, Stephanie Dorsey, CEO and co founder of Margins Capital, an investment firm focused on providing women and people of color access to an institutional quality portfolio of alternative investments. Today, we're chatting with Chijoke Asomugha. He was a founder of Fvlcrum Partners, a $300 million private equity fund that only invests in diverse-led companies. Listen to his compelling story of being ahead of the curve and then at the right place at the right time in 2021. Chijoke, it's an absolute pleasure to see you again. Thank you for joining us.
Thank you for having me.
Absolutely. So let's hop on in. Why don't you tell us, if you don't mind, your personal story, your background, and you start from where you want, if when you were a twinkle in your father's eye on up to to today.
Okay. Wow. All right. I can take you back to the twinkle. So Chijoke Asomugha, Nigerian, born here in the States, but I'll take you back. I was born actually in Louisiana. Both my parents immigrated from Nigeria to the US back in the mid 70s. My dad was a petroleum engineer, my mom a pharmacist. And so spent a number of years in Louisiana before moving to Los Angeles, where I got my formative years. That's kind of where I grew up. But I tell everybody my family story. My dad had always wanted my mom to have her own business. So she was doing the pharmacy thing at like what would be the equivalent of a CVS or Walgreens today. But they decided in the early 90s to purchase an independent pharmacy back when you still had a few of those everywhere in Southern California. And so before I could spell entrepreneurship, I was like, I want to do that one day. So I was working at the pharmacy at 12 as a cashier and a stock boy, along with my older sister, younger brother, and younger sister. And so it was really amazing to see. My dad then passed away about a year or two later. So when I was 12, 13 years old. So I then watched my mom spend the next 20 years growing that to 4 pharmacies and a home health agency in Southern California. So that was like, I got to see businesses kind of grow before my eyes. Fast forward, went to Stanford undergrad, had a phenomenal time there, played football, studied economics and public policy. Uh, I went there with this view that I'll even say this vision that one day I'd do something in business that would be great and transcend kind of not just where I was today, but kind of people everywhere. So community building, if you will. I left Stanford, graduated, and worked at Goldman Sachs for a number of years in investment banking, right around that technology, media, telecom space. Did some sports financing and then industrials, industrial tech. Um, Had a great time there. Like most people who grow up in Southern California, work in San Francisco and New York, the next logical move for me was Cleveland, Ohio. That's typically where you go next, right? You to LA, to Cleveland, Ohio. Now LeBron was there. No. In all seriousness, my wife is an orthopedic surgeon, and so decades ago or over a decade ago, she got into the Cleveland Clinic, which was a phenomenal opportunity for her residency. I had gone to business school at Columbia, was back at Goldman, said, "Don't worry about me, I'll make it work."
Mm-hmm.
I moved to Cleveland, didn't know anybody, so it was definitely interesting transition for us. Um, but I was fortunate to get a job in private equity, which is where my focus was. And so joined a company called Cyprian, or a fund called Cyprian Partners, which was doing great work nationally, investing in buyouts and mezzanine financings. So spent a number of years at Cyprian doing some great deals, running through a few funds 2 and 3, and right at the advent of Fund 4, I got that itch to be an operator. I remembered watching my mom and dad early on. I said, I want to roll up my sleeves and actually build something myself, or at least find out how the operations side of the house works. So I left private equity and joined Erico International, which was an industrial tech company, as their global head of strategy and growth. So I was doing all things supplier development. This small company, relatively small company in Ohio, had me all over the world, Netherlands, Europe, Asia, you name it, helping grow the business, South America. Long story short, we took a $600 million company, 3.5 years later, sold it for 1.8 billion to Pentair. And so it was a life-changing moment. And I'll say my wife hasn't let me forget she's the reason we moved to Cleveland in the first place back then. Uh, but it was really
Y'all me. She was with you shooting in the gym. She's like, no, that was yeah.
so,
She's your Savannah.
she's indeed. Uh, so great exit. And it was at that time I had actually met one of my current business partners and really, really good close friend, Marcus Martin, who was working in private equity at Riverside and then had gone on his operational journey with KeyBank. And we said, look, there's probably never a great time to say, hey, I'm quitting my job and starting a business, but this felt like a really good time. He had a successful exit as well. And so with that, we hung up our first shingle, called it the Inkwell Group. So it was a private equity firm with a focus on diversity, building diversity at the board level of lower middle market companies.
And what year was this?
This was 2015, right into 16. And I'm going to tell you right now, Stephanie, nobody cared, right? Diversity wasn't a big thing then. It was two guys who said, we think it's important. And so with that, we started doing deals one-off, right? We didn't have a fund. We would just pass the hat around when we found something we liked. About 6 months into that journey, we met two other folks, our current partners at Fvlcrum, Ben and Harrison, who had a similar outset on life in terms of private equity and diversity and bringing those two things together. So we said, let's partner together and start doing deals together. And that's what we did in 2017. Fast forward, George Floyd gets murdered, a lot of social unrest. 2020 hits and everybody's talking about diversity. They're like, oh, this thing that we were talking about, however many, I tell everybody we were ahead of our time.
Yes, you were.
But we decided to double down on our message of PE and diversity at that time and actually raise a fund. So no more passing the hat around. Let's raise a fund. So we created Fvlcrum, which is really Fvlcrum standing for like that opportunity for change. We want to be the Fvlcrum for change, where the capital markets see diverse investing as a different story, a better story. So launched in 2020, and then we had this view that we could raise, I don't know, $70 million, do some deals. 2021, we actually started that raise. I'll fast forward last year, 2023. So about 18 months into that fundraise, we closed our fund with over 300 million in commitments. All with the focus on investing in minority-owned businesses of scale. So we don't do any venture capital. We're late stage investors, buyouts, but it's been amazing to see kind of the support we've gotten along the way. And we talk a lot about the capital continuum. So whether you're at early stage, middle, late stage, we feel like we need to show up and represent across that continuum for investment strategies. And so,
hey, it's Stephanie. If you've been listening to this podcast for a while, you know I talk a lot about how the wealthy think about money differently. And one of the biggest differences is how they approach taxes. Most high earners wait until April, file their taxes, and hope for the best. Wealthy people, they plan the October before. They design their income, assets, and giving around the tax code. And the gap between those two different approaches, tens of thousands or hundreds of thousands of dollars every year. That's why I created the High Earner Tax Playbook. It's a course that breaks down the exact strategies wealthy people use to legally pay less, from maxing corporate benefits the right way to side hustle or business deductions, donor advised funds, tax loss harvesting, and advanced strategies like QSBS for investors and mega backdoor Roth. This is not tax advice. This is tax education. So you can walk into your CPA meeting informed, confident, and strategic. If you are tired of overpaying out of ignorance, check it out. Link is in the show notes below. Now, let's get back to the show.
Yeah, we're now investing out of Fund One. We have 6 portfolio companies with some amazing CEO, founders, and executives, and building out the boards of those teams now. So
Okay,
those,
I have so many follow-ups. And what is kind of the advantage, the competitive advantage you think you all bring by going after that specific target?
Yeah, well, even in your question, there's a lot there. So why is it important? Diversity matters, right? I think that's how you get the best out of your companies, your people, when you have that diversity of thought, the diversity of backgrounds. That's not just me saying it. That's a number of studies from McKinsey to across a number of places where they've showed that returns are better when you have a diverse group. And that's truly diverse group. For us, we always thought that, what we heard was that you're sometimes sacrificing alpha or the returns when you focus on impact.
Mm-hmm.
We fundamentally believe that no, impact enhances the returns. So we tell, and we've shown this out in our track record, but that we use impact and alpha together, right? Versus the other. It's like, no, they work together to enhance the returns for our companies. And so for us, diversity is hugely important. We have spent the better part of our careers cultivating relationships that we think bear fruit when you think about executives of talent who are often overlooked, right? We always say talent is created equally, but opportunity is not. And so how do we now start giving that opportunity to a lot of these founders, these operating executives who, for some reason or other, the capital markets seem to ignore. And so, when you talk about competitive advantage, I think the biggest one for us, well, there's 2. A, we're not trying anything new. And when I say that, it goes hand in hand with the fact that this is what we've been doing for over a decade now, right? This is like where our experience is. We're not, hey, see if this works. It's like, no, this does work, and you're going to watch us perform. So I think that's the first thing, right, from a competitive advantage. The other thing is, today we're kind of, I'll say, the market is still trying to wrap its head around what does this mean when there's that lens of diversity on it. And so we're taking advantage of the fact that I'll say that it's I don't want to say unstable, but more of like not mature in the marketplace in terms of an understanding from a capital markets perspective. And so, when you have that kind of uncertainty or people don't know, that's the opportunity to make money, because you're like, no, if you believe in it, if you're truly passionate about what you're doing, even when everybody else doesn't know, you can find those opportunities that are overlooked by others. And so that's what we're doing now through our strategy.
I think, and I'm sure you're aware of some of the market has kind of shied away from DEI investments, and there's kind of like, does this really matter anymore? And people who are very, very pro diversity and inclusion immediately after George Floyd have backed off. How have your LPs showed up in this new world of, does it really matter? Or are those the real guys anyway? Because they put up money, so they were really about it anyway. So I'm just curious how that's showing up at Fvlcrum.
Yeah, look, you can never undersell the fact that when people put capital towards what you're doing, it speaks volumes. So we have a tremendous group of LPs who believe in what we're doing. And that spectrum on their interest in DEI, their interest in returns, I think it runs the gamut. They're like, you guys, something that works business-wise, because you can put a lens on something, but if it doesn't make business sense, people will shy away from it. But when they can see those two things working together, that's when people get excited. So our LPs have been super supportive from day one. And I think with any messaging, you find those who align with you, and then those who don't, you don't really spend time talking about because they're just not there. But yeah, no, we've got a tremendous group of LPs, and really institutional grade too. Our fund was, I think, a little bit over 94% institutional, which is rare for a first-time fund.
Yeah.
Could you see that with maybe more family offices and high net worth individuals? This was predominantly institutional for us.
Yeah. Okay. And then, last question. Oh, actually, not last question about this. All right. So let's talk more about Fvlcrum. I want to make sure I understand your thesis. So you all are interested in buying small cap, diverse owned businesses, industry agnostic, or can you talk a little bit more about what you're focused on?
Yeah, absolutely. So from an investment strategy perspective, we focus on three main industries: government contracting, healthcare services, and then business services, typically tech-enabled services. So if I break that down a little further, in the government contracting space, we look at a lot of infrastructure services opportunities. We look at a lot of healthcare services opportunities, IT as well. On healthcare services, for one of the companies in our portfolio is a dental roll-up. So we're looking at dental practices. We're looking at any service-based healthcare opportunity. And then on the business services side, a lot of that takes the form of cybersecurity, tech-enabled media and marketing platforms. We now own an iconic 50-plus-year-old marketing agency in Burrell, which is multicultural marketing. And so,
Burrell, yes, they're yes, Chicago based, right?
Exactly.
Yeah. Okay, that's dope. That's dope. I'm like, oh yeah.
Yeah, no. So those are the three areas: government contracting, healthcare services, and then kind of tech-enabled business services. In terms of the company sizes, so typically what we're looking for are companies that are doing anywhere from 3 to 15 million in EBITDA. Our sweet spot is right around that 5 to, call it, 10 or so EBITDA. And then geographically, we're focused on the US because our aim is to close the racial wealth gap. So companies are headquartered here in the US, but a lot of them have international operations, which is a plus for us. So yeah, that's kind of from a strategy perspective, that's where we hone in. And then typical management buyouts, leverage buyouts, all of the things that we've spent our careers doing.
Okay. And then well, it's probably not the last technical question. So, I know you bore witness to your mom and her entrepreneurial journey. Seeing your mom and her journey let you know, like, yes, this is possible. I should absolutely do it. Did you keep that energy and that knowledge that you would be an investor or an entrepreneur on, to this day? Or was there a time where you kind of got off track a little bit and had to bring yourself back?
Yeah, it's funny you mentioned that. I probably would use a different term than off track. I would say adversity strikes at different points, right? And that's part of being on this journey. What I've learned, and I can take you back, right? I mentioned losing my dad, but even in my more formative years as an adult, moving to Cleveland, that wasn't in the game plan, right? So how do you make these things work? Starting your own business, not having success on day one, how do you make it work? There's a Nipsey Hussle quote that I often refer to where he talks about the difference between him and a lot of other people is that he never gave up.
That's right.
I didn't quit. And it resonates so much with me because that's it, right? I'm not saying that other people give up and quit all the time, but it's like I just kept finding a way.
I hope you enjoyed today's podcast. I too am inspired to not quit every time I chat with Chijoke and every time I listen to Nipsey Hussle, RIP. Don't forget to like, follow, and subscribe wherever you like to consume your podcast, and we will see you next week. Bye.